Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES broke out to a new all-time high, but then that breakout actually ended up failing. And at this point, the market has been under more selling pressure over the last few hours. And heading into the morning, we have pre-market resistance at 38.5 to 40.5 and initial support 32 to 34. Those are really the key areas that are going to be in focus right off the open here. And continuing to hold below 38.5 to 40.5 would be a warning sign for buyers, and it could end up resulting in some continued selling. On the downside, we have a important short-term high volume node at 33.25, and that's part of that 32 to 34 initial support. So if you start seeing a breakdown below 33, that would just confirm the short-term bearishness in the market, and at that point we can test yesterday's lows and even break lower and go down to 19.5 to 21.5, because that area down at 27.75 to 28.75 has been tested multiple times, and approaching that zone again, it can technically still attract buyers, but at this point it would be a third or fourth test of that area, so it would be a weaker zone which could give way and result in a move down to 19.5 to 21.5. So heading into the morning, we know that the market has been quite bullish, but now we are seeing some real warning signs where the upside movement is not really sustaining, and we're starting to see failed breakouts more and more. So we do have to be careful this morning. So the key support, the short-term support, that's really going to be the focus, is that 32 to 34, specifically the 33.25 high volume node on the downside. And if we continue to hold above it, then we can balance and slowly perhaps start moving back up. But short term, heading into the open, the sell side is a bit more dominant here, and holding below 38.5 to 40.5 could result in balance and then potentially even a break down to 27.75 to 28.75 and possibly even down to 19.5 to 21.5. So we do have to be cautious today, right? Even at 32 to 34, we have to play more defense and be aware of this short-term bearishness that we're seeing in the overnight session, and just the overall theme over the last couple of days has been shifting a bit, where we are starting to see a little bit more selling in the market, and for that reason, you just want to be a bit more cautious on the long side now. You're trading near the all-time highs. The upside potential is relatively limited, and for that reason, you just want to play more defense at that 32 to 34 support. And if 33.25, that high volume node, really gives way and breaks, then 27.75 to 28.75 might only provide a short-term rotation, and if everything else is looking quite weak, internals are quite weak, momentum is down, and tick is holding below zero, and we're seeing some consistent and sustained selling pressure in the market, then it could be a complete failed breakout and take us down to that 19.5 to 21.5. That area can still attract buyers for a bounce back up towards the 25 to 27 area, and depending on the momentum and how weak the market's looking, we'll have to gauge that in real time. But 19.5 to 21.5 can still provide a reaction, but as far as if that zone's going to hold, that's something we'll have to determine in real time. And in the event that we get some extended selling and 19.5 to 21.5 on the downside ends up breaking, then the next main inflection point would be down at 2010 to 12.5. But at this point that's quite extended, so we're not really focused on it. We're just going to take it step by step. So heading into the open, let's see how the market holds at the 33.25 high volume node, 32 to 34 support. And if that gives way, then that would be a confirmation that sellers are in control. And at that point, we'll have to switch our focus and start looking for short setups until the market starts trading back above 32 to 34, and even then 38.5 to 40.5 could end up attracting sellers, and it can still provide a nice short. So right now the market is pretty neutral. There are enough warning signs that are telling us that we need to be careful on the long side. So we are going to be cautious on the long side off the open. And if we start seeing some pretty heavy weakness, then we'll look to position ourselves short, especially if the momentum remains to the downside and it looks like we could be breaking below that 27.75 to 28.75 area, because a break below that zone could accelerate the selling down into 19.5 to 21.5. So it's a very neutral short-term bias heading into the open, where we know that overnight sellers have been active. Bigger picture, we know that we're in an uptrend. So how we react to 32 to 34 is really going to determine where this market can go. And on the upside, 38.5 to 40.5 is really the key spot. And if we can clear that, then we can even print new highs. So key resistance 38.5 to 40.5, key support 32 to 34. Let's see how the market reacts over there, and that'll help us establish our bias, and we will take it from there.